Hello, traders. It's about 90 minutes before the open on May 4th, Thursday. Let's get started. I want to take a look at our last picks. We'll do market analysis and then we'll find two new picks. SKX. That was the long that I featured Sunday night. Love this breakout through horizontal resistance. That is a high plus. This is a longer term high minus trend line. Let's zoom out, see where it came from. Very long term trend line. Nice breakout post earnings. Big volume. All of those ingredients are key elements. I believe that this stock would continue to go higher, and it's actually shown fantastic relative strength. This is where the video came out, and you can see how the stock has been able to preserve all of that green candle. Nice bullish hammer right there. It is actually higher, and this on the surface may not seem like a big deal, but let's take a look at what the market has done during that time. We're going to overlay the SPY, and this, by the way, is Option Stalker. It is a trading platform that I designed and offered to professional traders. You can see what the market's done here. Down, down, down. This stock has been able to preserve that breakout, and it's been able to preserve all of the gains post earnings. Folks, this stock wants to go higher. So what do we do with this information? How do we trade it? Well, I've mentioned we are focusing on day trading. We'll get to market analysis in just a second. The market is not going anywhere. I could make a case for a breakout to a new relative high. I could make a case for the market pulling back to those major moving averages. We don't know which way the market's going to go. So we keep our trading very focused on day trading. Plus, we had a lot of news coming out, tons of earnings. We had the FOMC statement yesterday, so keep it to day trading. Let's go into a 5-minute chart and take a look at SKX for the last few days and see how we might have traded that. So you come into the day and you go, hey, I am bullish on SKX. I just have to wait for my windows of opportunity. And here you can see how the market is grinding higher. This was after the big gain that the stock had made post earnings. So it has a little bit of follow through, but given that the market is moving higher and the stock is drifting lower, it's weak relative to the market, orange line below zero. So there's no trade for us here. The stock is digesting really big gains and that big breakout from the previous day. And you can see how the market drifts lower later in the day. Stock was drifting lower here while the market was rallying. Okay, that's your sign to stay away. Here's a good tell though. Look at what the market did on Monday. Sold off hard. What did the stock do? It pretty much closed where it opened. So it did not participate in that big market decline. Market actually closed lower than its open. So now we go to the next trading day and we can see, oh, pretty big market decline here. Well, the stock finds support well below the mark before the market does. Okay, so let's review this point. Yes, the stock is down. Typically, I don't like to buy a stock that is below its prior day low, so I would not have done this trade in all honesty. So it does find support before the market does. So you get your tails right in here. You get the stock continuing to drop. Stock is strong relative to the market. As soon as the market finds a little support, whoosh, the stock is off to the races. So again, I like to trade stocks that have been able to get through the prior day's high, which is right here. Now, here we have another scenario where market down, 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 stock fills in that gap right away. And now, while the market's going down, it's continuing to move higher. Yes, as soon as the market finds support, this is a stock that's going to want to run higher. There it does. Through the rest of the day, as the market finds its footing, market starts going up, this stock is leading the charge. So wait for that 1OSI to be above zero. This is a beautiful little entry point for that stock. Yesterday, this is yesterday's price movement. We had the FOMC. Let's take a look at the bearish pick that we had. Actually, I gave you two of them. NOV was one of them. And these you would expect would have performed pretty well, right? The market was down. Hey, if Pete gives me a bearish pick and the market is down, this stock should really be down. Well, it was. You can see how it's fallen from Sunday, roughly around the 1680 level, down to about 1531. So that's a nice $1.50 move. That's about a 10% move in a handful of days. Let's run through the same exercise here and take a look at where our moments of opportunity were. Well, we had one here where the market was declining and the stock was weak relative to the market yesterday. That was a very nice short in there. So you had another opportunity tail end here late yesterday when the FOMC statement finally started to take its toll on the market. Let's see if we've got some other nice opportunities. We had a gap down and the market continued to sell off hard on Tuesday. That was a really nice opportunity as well. You could see how the bottom fell right out. Energy stocks in general right now, very, very weak. Once it put in the low, it didn't get off the deck, and that's another sign of relative weakness. See how the market bounced? Gray line is the S&P 500. See how the stock was not able to get off the deck? Every time that buyers would come in, wham, 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 they were nailed right back down. The whole energy sector is under pressure right now. So, yes, there were opportunities to short this stock during the course of the week. And that's what you have to do is you have to wait for your windows of opportunity. What are we going to be expecting the market to do? Oh, let's put up IP. That was the other short that I liked. And let's take a look at that. And yes, you can see how that's where the video came out, and you can see that the stock is down probably from about $33 down to about $32, got a little bit below that. So nothing to write home about, but very nice technical breakdowns through these trend lines. So what do we got cooking with the overall market? Well, we've had so much news come out recently. There is a tendency for the market to have a very strong bid into the mega cap tech earnings. Why? I don't really care why. It just exists. I believe that the reason for it is because these stocks have led the charge not only this year, and I think if you took out 8 of those mega cap tech companies, the S&P 500 would be flat for the year. That's how concentrated this rally has been. That's how much upward pressure these stocks put on the market. So shorts tend to be very passive into these mega cap tech earnings. By the way, the last of the giants reports today after the close. Apple is going to be reporting its earnings. So shorts are relatively passive until those tech giants report because there's always upside surprise. Well, why would I want to face that uncertainty? Why would I want to stick my head in that news when they've been leading the market higher? I wouldn't want to. But once they've reported and once shorts can assess what impact they had on the market, well, then the air gets let out of the balloon and they are more confident in shorting. So we've had a lot of earnings. In general, earnings have been good. They've beat expectations, but valuations are still pretty dang rich. We've got the Nasdaq trading at about a forward PE of 28. The S&P 500's at a forward PE of 18. That's not a bargain. And we're starting to see some signs of resistance. So that's a horizontal resistance level, lower high, and then we were able to get back to this high, but you can see how quickly we've been repelled. So we're starting to see some signs of resistance here. You can see these 3 long stacked red candles, and now we had the FOMC statement yesterday. Negative reaction to it. Why? Well, right now, the market is pricing in that there is going to be a reduction in interest rates, an interest rate cut sometime in the last quarter this year. But that's not what the Fed chairman said. And he was pressed on this many times. He said, do not expect any rate cuts this year. And they've been steadfast in that commentary all year. In fact, they left the door open for additional rate hikes. They feel that inflation is still a big issue. Well, we also have this banking issue brewing under the surface. And we have another regional bank that was purchased, and it was really, really soft. So all the regional banks are starting to come in. In fact, TFC was one of the shorts that I showed you last Thursday, and you can see I love this breakdown right here. That was what I highlighted it right here. You can see the bottom has fallen out. So your two sectors that you really should be focusing on for shorts is energy, excellent sector, and financials. Both are super, super weak. So maybe we'll be able to find some picks in that area. But now that mega cap tech earnings out of the way, now that the FOMC has been more hawkish than people had hoped, I think that the market is going to retrace and it's going to pull back. And we have very light volume during this rally. And so that tells me that you get the initial scare about Silicon Valley Bank and then no other bank failures, and the Fed comes in and they add a lot of liquidity to the system. So that reduces risk, and you get this nice little relief bounce, which is really just a lot of shorts covering their positions and adjusting some of their positions. Now we've got Credit Suisse had to be bought out. We've got another bank failure in FRC. All the regional banks are down. So there was a report too that there are a couple dozen regional banks that are in a similar situation to Silicon Valley Bank and FRC. That is going to weigh on the market. So we'll see what unfolds, but that's how these credit issues unfold. It's like little rumor here, little rumor there, then the next thing you know, 1, 2, 3, 4 dominoes start to fall. So this is a time to really be cautious from my viewpoint. We need at least 3 or 4 months to see how all of this plays out, because all of the interest rate hikes that the Fed has imposed in the last 10 months are just now starting to cycle through the economy. So we'll see. And perhaps that's why everybody feels that there's going to be a rate cut in the fourth quarter this year, is because they feel that we're now going to see the economic impact and it's going to be fairly dire. At least that would be the forecast. I haven't seen any signs of that yet. Yesterday, the ADP number came out relatively strong. ISM services came out relatively strong, 51.9 in expansion territory. ISM manufacturing was a little better than expected. So the economy's hanging in there right now. Hopefully that will continue. Watch the market along these major moving averages. I think they're going to be tested, and we'll put those up so you know where they come into play. And we're seeing a little bit of weakness this morning. S&P futures are down about 15 points. So, Pete, you've just painted a bearish picture. Why are you not just showing us some bearish swing trades? Because I don't have any concrete evidence that we're going to crack down and test these major moving averages. You can see long green candle, long red candle, long green candle, long red candle. That pattern is preserved. I don't know where the market's going to go. I've got to stick to day trading. If I start getting some nice orderly price action in here, long red candle stacked right here today through the 50-day moving average, long red candle stacked through the 100-day moving average, heavy volume. Okay, that's something I can lean on. That is the type of selling pressure and momentum that will give me the confidence to start shorting on a swing basis on the notion that we could test the low of the year. But we're not seeing anything like that. And we're going into a relatively quiet period after we get through the jobs report this Friday. The earnings are going to start winding down. There's really not a lot of news. There's no catalyst to drive the market. So I think we're still going to be kind of in this day trading mode through summer until we get some organized directional movement. Hopefully, we get through the summer without any new credit issues. If that happens, then the market bid will start to really strengthen, and asset managers will take greater confidence knowing that that dark cloud has passed and some of that longer long-term money will start to come into the market if inflation starts to subside and if the Fed stays on the sidelines for quite a while. So that's the bullish scenario toward the end of summer. The bearish one would be, oh my gosh, the economy is tanking and the Fed is steadfast in keeping interest rates high. This could get really ugly. We could start to see a lot of loan defaults on the regional bank side. This is, by the way, the fastest interest rate hike that we've seen in decades. So banks they're struggling. Many of them are on the ropes here. So we'll see how all this plays out. Let's take a look. Let's see if we can find some trades. And we'll start on the bullish side of the coin. And I'm going to go into a search called heavy buying. All of these stocks had very, very nice momentum yesterday. And let's go into that 5-minute chart one more time just to take a look at that FOMC reaction yesterday. You can see this is one of the most muted reactions that I've seen to an FOMC statement. Long wicks, long tails. For an hour, we went nowhere until finally traders decided, yeah, there's a bit of a disconnect here. We've got the market pricing in an interest rate cut in the last quarter of the year, and the Fed chairman just said, don't even think about it. Okay, so the market is selling off. And we're down about 15 points before the open today. So, yes, we had nice little sell-off yesterday and some follow-through this morning. So let's see how things play out this morning. These are stocks that were in go-go rally mode yesterday. I think I'm getting a little bit long on this video, so I'm going to cut to the quick. And we're going to take a look at a stock that I like off of our heavy buying list. And we're going to take that S&P overlay off just to make the chart a little bit easier to see. This is a high plus trend line, very long-term trend line. It's relevant. Nice breakout. Big volume. So Lilly had some news on an Alzheimer's drug that they released. This is a type of material news that can impact a company very long term. I'm not here to endorse the drug. I don't need to. I watch price. Price tells me if institutions want to own this stock, and the answer to that question is you betcha. So I think this stock still has room to go. Well, what are the tells? How can I be so confident? If you take a look at the price action yesterday, I just mentioned to you that the market sold off after the news, the FOMC statement, down pretty hard. What did the stock do? Continued to move higher, held all of its gains yesterday. That is such a big tell. So let's put that SPY overlay up. I know it helps everybody to really see what's happening. Market down, down, down. Stock holding its own. These buyers, they don't care that the market had a little hiccup. They want to own Eli Lilly long term. So when a stock would naturally have selling pressure like this because of the market sell off, bye bye bye, bye bye bye, bye bye bye. Well, Pete, I really can't buy a stock that's at its high because I feel like the bottom's going to fall out. At one point, Apple was making a new all-time high, and then it went up about 50-fold. At one time, Google was trading at an all-time high, and it went up 50-fold. You need to know when to buy these breakouts at a high because the stock keeps going higher. And I just told you the tells to look for. I like Lilly. I think Lilly's going to continue to go higher. You do not need to rush in and buy it first thing this morning because we're going to get a bit of a market pullback. So what would you be looking for when the market pulls back? You can see here, let's go into the M5 plus chart. You can see the market has been drifting lower. This is the S&P 500, the SPY pre-open. So what do I want to see in this stock? Well, I want to see the stock preserve its relative strength. So when the market opens and it goes down, 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 I want to see Lilly open and preserve all of those gains if it opens higher. If it opens flat, I just want to see it holding steady while the market drifts lower. That is relative strength, and the orange line will be above zero. Then I have to wait and see, is this market sell-off going to manifest into a bearish trend day? If it does, and we get stacked long red candles on the open, and that reaction to the FOMC statement is really bearish, then I don't buy Lilly. I leave it alone and I focus on the short of the day. If the market pulls back and it's a wimpy little sell-off and it starts to form support and it looks like the market's going to bounce, that's when I want to be in Lilly, especially if it's been showing me that relative strength. As soon as the market starts to find a bid and it starts to bounce off of that low, Lilly is going to lead the charge higher. So that's how we would trade it. Let's take a look and let's see what we've got on the bearish side of the coin. So I'm going to click into my bearish searches and I'm going to go into red royal flush and I'll put that daily chart up and we'll be able to take a look and see if there are any trend lines that come into play. MPC is the first stock on the list. And here you can see relatively choppy price performance in here, but let's zoom out. When the trend lines pass through the bodies of candles, it's simply a display issue. They will correct as soon as we zoom out, and we'll be able to see exactly where those trend lines come into play. This is a very long-term trend line here that starts all the way back in December of 2021. Nice touch there, coming into play right here. Big breakdown on volume. So when you see this and I zoom back in, just remember this lower trend line, that's a big one. Already seeing relative weakness in the stock. This is a nice trend line. This one dates back to October 12th, 2022. So these are significant breakdowns, both of them post earnings. Let's zoom in, take a closer look. So remember, this is a significant breakdown. This is actually that really long-term trend line. We blew through it with a long red candle on heavy volume. Let's take a look at the M5 chart and see what the stock did yesterday. Sold off hard. In here where the market is muddling around, remember the S&P 500 yesterday after that FOMC statement, it tried to go higher. I mean, we had these long wicks up in here. Well, we had a nice little market bounce during the middle of the day. What did the stock do during this market bounce? It bounced a little bit, but then it sold off hard. Even before that FOMC statement, during that FOMC statement, it did not bounce. So you can see here you're getting nice bounces in the S&P after the FOMC statement. What did the stock do? Relative weakness. They don't care that the market went up. They want to unload MPC. Sell, 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 sell while the going is good, because when the market does start to fall, this stock is going to crumble. MPC is your short pick of the day. Thanks so much for watching, everybody. Trade well. We'll see you Sunday night. Let's see if we get some selling momentum off of that FOMC statement. We got the jobs report tomorrow, so we could see a pretty decent decline today, and then things kind of settle, and then we wait for that jobs report tomorrow. Again, thanks so much, everybody. We'll see you Sunday night. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.